Warm greetings to you, tax accountants. This is Jeff, again presenting another edition, and we are doing taxation. I want you to get your pen and your paper as we start another section on determination of taxable income of corporates or companies. Okay, so that's my number. Those who are coming across my video for the first time, that's my number that is appearing on the screen. For all the international students, please remember to put the code so that you can get in touch, as I am in Zimbabwe. So our focus today is understanding exemptions. We want to start with the last section of this one. We want to know what are exemptions. So we need to define what exemptions. We need to define exemptions. That's the first thing that we want to do today. So I want you to get your pen and your paper as we kickstart our lesson. Okay. Then after that, we want to be in a position again to explain exemptions applicable to corporates. Okay, that's another aspect that we want to cover today. Exemptions that are applicable to corporate. Then we need also to know how do we account for exemptions. Okay, our key terms today, we are going to use the third schedule of the Income Act and section number 14. So these are the key terms of today, third schedule and section number 14. All right, let's move on to another section where we can actually kickstart on what we want to cover today. Okay. Remember, this is tax for companies, so we need to be in a position to determine the taxable income. Those who are seeing my videos for the first time and those who are questioning my qualification, I'm a holder of first degree with the University of Zimbabwe, and then also a master's in commerce with specialization in applied accounting. That's my number that is appearing there. Let's get started. Let's get started now. We want to be in a position to define what is exemption, definition of exemptions. What are exemptions? Okay, exemptions are defined as receipts. Okay, remember what we do in in determination of what we call taxable income. We call this taxable income any amount that is received or accrued by. Okay, received is the key term there, and also accrued. So what are exemptions? These are exemptions are defined as the receipts and accruals of revenue in nature, and it must be of what? Revenue in nature, right? Which are free of income tax. Okay, I think this is very clear to everyone. What are exemptions? These are receipts or accruals of revenue in nature, right? Which are free of income tax. That's the definition. We've met the first requirement of our lesson objective. Okay, we want to have some incomes that we can exempt according to the Income Act. What are some of the incomes that we are expected to exempt? We have got what we call bonuses. We agreed that income cannot be exempt unless it first meet the definition of gross income according to section 8. Okay, it must be part of gross income. All right, then for example, we have got bonuses. Okay, bonuses are under section 8(1)(b), third schedule, paragraph 4(o). All right, it must first qualify to be gross income. After qualifying, then we exempt the certain portion, the whole amount or part of the amount. For example, let's say bonus is part of gross income according to section 8(1)(b), third schedule, paragraph 4(o), right? 90,000 according to the current statutes. We have got the exempt portion is 25,000. So that's the qualification for income to be exempted. First of all, it has to be part of the gross income. Okay, that is that on that, right? Then we want to also understand some incomes that are also exempted. We've got dividends from local companies. Let's say we've got companies like Econet Wireless, right? I think that's very clear. We've got companies like Econet Wireless, okay? We've got what we call the Econet Wireless, okay? Econet Zimbabwe, okay? This is a local company, right? So we're saying dividends from local companies are not taxable in the hands of the shareholder. Let's say the shareholder in this case is Mr. Chi, right? Or Mr. Chi is the shareholder, and dividends, Econet declared dividends, let's say a dividends of how much? $100. What are we going to do with this $100 in the hands of Mr. Chi? Okay, what we are supposed to do, this is exempt income. It's income, right? According to section 8, right? It's income, but we exempt it. This is an exemption according to which section? Section 14. This becomes an exempt income. So dividends from local companies are not taxable in the hands of the what? Of the shareholder. That's very important for you to recall that and remember that, okay? And all dividends from companies exempted from paying tax. Building societies, benefit funds are taxable in the hands of the shareholder. Let me read again. All dividends from companies exempted from paying tax. There are some companies that are exempted from paying tax. For example, we've got building societies, benefit funds are taxable in the hands of the what? The shareholder. But dividends from local companies are not taxable in the hands of the shareholder. If the company is exempted from paying tax, then it means the dividends that will be declared or paid to shareholders will be taxable in the hands of the shareholder. Okay, let's move on. Remember, we want to move with time. Withholding tax on dividends paid to individual partnerships and non-resident companies is calculated as follows. So you need to take note. So when we are calculating our withholding tax, when we are determining our what? Our withholding tax, all right? For quoted companies, these are companies that are listed on the Zimbabwe Stock Exchange. How do we calculate our withholding tax? This is 10%. Non-quoted companies, we use which rate? We use 15%. Okay, I think this is loud and clear. Remember, we are covering exemptions. Dividends from local companies are not taxable in the hands of the shareholder. Take note of that, right? Take note of that. Then when we're calculating withholding tax for quoted companies, we use what? 10%. When you're calculating non-quoted companies, those companies that are not listed on the stock exchange, we use 15%. Okay, remember we're covering what? Exemptions. Exemptions under corporates. We are not covering exemptions on individual tax. These are exemptions under corporates. Receipts and accruals of the following are free from income tax. Receipts from where? From building societies, from medical aid societies, from post office, from RBZ, from Zambezi River Authority, from CIS, ACCA, ZAAT, IAC. These are professional accounting bodies that we have. Commercial farmers and societies such as CIMAS, that are the medical aid societies. So we're saying these are exempt incomes. If you receive income from a building society, that income is tax-free. I think that's to make your life very easy in this case. If you receive any income from RBZ or income that accrues to you from RBZ, from post office, from Zambezi River Authority, from CIS, from ACCA, these incomes are exempt or they are tax-free. Is it making sense? So you need to take note, please. Receipts or accruals from where? From building societies, from medical aid societies, for example, CIMAS, post office, RBZ, from the accounting body or the professional bodies, commercial farmers, unions, etc. All these incomes are free from tax, so we call them exempt income. Let's move on to other exempt income. all incomes or profits that could have been attained for not-for-profit making organizations. These also qualifies to be under section 14 as exemptions. All right, let's say we've got income from churches, we have talk of tithes, we talk of offerings there, whatever they get is tax-free. Government school profits, let's say a government school like let's say Mbari High School has maybe earned a profit. That profit is tax-free. It's income to Mbari High School, but it's tax-free. Let's say also income from or profits from trade unions and trusts of public nature also are tax-free, or in simple terms, according to the taxman, they are exempt income. All right, I think let's finish up. Right, the last section that we want to cover today is profits earned by the following following foreign organizations are not taxable. So we are saying we've got foreign organizations that are in Zimbabwe. All right, foreign organizations that are in what? Zimbabwe. They cannot be taxed when they receive income. All right, why? Because of various reasons. They're not for profit. They are there to assist the society. All right. For example, we have got income or profit that could be earned by World Health Organization, United Nations, UNICEF, FAO, etc. Then also income that could have been earned by Africa Development Bank, ADB, South African Reserve Bank, or in simple terms, all international financial institutions. Such profits earned by these international organizations are not taxable. Okay, so what I encourage you for the meantime is for you to quickly go through the slides again so that you can actually learn from these slides. When you learn from these slides, I think you will be ready to go when I give you a question that I want you to attempt. So what we are going to do now is for you to just go through the slides in a very fast way. We said today we defined what is exemption, what are exemptions, and we explained some of these exemptions, and we know how to treat these exemptions. So exemptions, for example, what you need to do when you are accounting for exemptions, you need to put it under gross income, section 8, right? Then you apply the exemption portion. For example, the bonus of the person has received a bonus that's gross income 90,000, then you deduct the exempt portion. And after that, what we have covered today, we said exemptions, these are receipts or accrual of revenue in nature that are free of income tax. Then we said the dividends from local companies are not taxable in the hands of the shareholder. Then we said withholding tax, that's how we compute withholding tax. Then we said receipts and accruals from the following organizations are free from income tax: building societies, medical aid societies, post office, RBZ, the CIS, the Commercial Farmers Union, they are all exempt. Then also profits or incomes earned by churches, by government schools or tertiary education organizations that are government owned, and trade unions that are of public nature. All these are exempt income. So when you get them, you put them under gross income, then you exempt the portion that is also allowed as an exemption. Then the last part that we covered, foreign organizations, when they receive profits or when they make profit or receive income, the income is tax-free. Bye-bye for now. We meet in our next lesson, which I want you to make sure that you are hooked when I will be demonstrating how we treat deduction for companies, so that we can answer the questions in the examination in a nice and a good way. Bye-bye for now. Remember to subscribe to our YouTube channel. Invite somebody to